Subscribe to our YouTube channel and press the bell icon to get the latest updates.
Hello subscribers, welcome to the Fast Profits Daily. I am Brijesh Bhatia. As budget is around the corner, we have around 10-12 days left for the budget, and looking at the market scenario, markets have been trending in a range for quite long now, between 18,150, 18,200 on the upper side, and 17,750, 17,800 on the lower band. And this range have been I would say into the triangle structure for quite long. And if in case you are following me on Telegram, I regularly post the Nifty chart or the patterns which are been developing on the Nifty, Bank Nifty, or any of the index where I think that the structure seems exciting, probably a bullish or a bearish. And I generally share this chart on my Telegram. So in case you are not following me, you can follow me, and the link is there in the description as well. In this video, I'll be discussing what would be the trading strategy as we step into the budget, or probably a couple of days of budget, and what are the sectors one should watch. I have considered 3-4 sectors, and there may be n number of sectors which may impact with the budget announcements. But considering the momentum, or generally there are FMCG, consumption, infra, and these are the sectors where the budget announcement makes a big difference onto the sector. So I'll be covering in the second half of the video, and in the end I'll be discussing one probable strategy onto the derivative side, where I believe that this strategy, looking at the technical pattern of the Nifty, and that could be strategy one can implement on. So before I come on to the view of the Nifty, let's look at the seasonality analysis of the Nifty for last 27 years. And this is the month-on-month seasonality analysis. And if I just look at the monthly Jan, Feb, and March, and if I just look at it's been exciting numbers. If I just look at the Jan for last 27 years, it has been on a negative side with the minus 0.16% return, average return for the month of Jan. If I look at the average return for the month of Feb, it's been around positive 0.98, which is nearly a 1% positive onto the Feb. And for the March, it's around positive 0.14. So as we are into the Jan, and ending on to the last week, the next week would be the last week for the month of Jan, and the following week where we will have the budget. So if I just look at the quarterly numbers, yes, quarterly numbers are very exciting. And if I look at last 12 years for the Feb, or probably if I just even look at the Jan, the 12 years have been on a positive side against the negative 15. And if I just look at the marking on your screen, the table one, where I marked the red, which is 2008 and 2020, though it was unexpected financial crisis was there in 2008, 2020, the pandemic, and that's the reason we have seen a 24% and 31% fall onto the Nifty over here into the quarterly basis. But if I just look at the week on week analysis over here, if you look at the screen, I have taken from week 1, week 2, week 3, week 4, week 5. Generally budget falls into the week 5. And if I just look at the week 5, if I just look at the last 10 years, the average have been for the week 5 has been around 0.11%. So it's been on a flatter side. And out of 10, 4 have been on a positive side, and 6 years have been on a negative side for week 5, where the generally the budget is. If I look at the week 4, a week prior to the budget, it's been around 0.1% positive with 6 positives and 4 negative years. And if I just look at the week 6, the next week post budget, the numbers have been on a negative side with around 0.7% downside, 3 positive, and 7 years have been negative. Weekly seasonality analysis indicates that yes, there is a possibility that post budget fall maybe, but pre budget there could be a positive momentum looking at the week on week numbers. I have considered week 6 and week 7 for us, our audience, that they can review the momentum over here and look for trading buyers. And if I just look at the week 6 average, week 6 and week 7 average, week 6 is around 0.7 as I said negative, and week 7 is around 0.1 positive, with 4 years being positive and 6 years being negative. So generally week 6, week 7 has been on a flat to negative side. So that has been the reason to highlight over here is the week prior to the budget has been generally the bullish scenario. So next week, keep a watch that we may see a bullish momentum. And if I just look at the structure, the technical structure onto the Nifty, so let's start with the weekly chart over here. If you look at this weekly chart, we have been seen a huge breakout coming onto the weekly scale. If you look at the red line, the right extreme right, we have seen a breakout, the rally towards 18,887, the all-time high. We slipped back towards 17,800 on the downside to retest this breakout. And now we are slow and steady gaining a positive momentum, which means that if you look at the retest and the slope has been on a positive side. Additionally, if you look at this orange line, which is 50 weekly exponential moving average, the slope is also trending bullish, which means that the last 50 weeks, which is nearly a year, 52 weeks we have in a year, and 50 weeks average, if you look at, the slope is trending onto the bullish side, indicates that the trend seems very, very bullish onto the weekly scale. If I use the top down approach and move on to the daily chart onto the downside, look at the structure. A triangle breakout has been witnessed. As I said, we have seen a triangle structure consolidation of nearly 27 days, not a trading day, 27 days. So mid of December till mid of January, we have seen a consolidation zone coming onto the Nifty. A triangle breakout is visible onto the charts. This chart has been updated till the close of Wednesday. And if you look at the momentum, it seems a bullish side. After a long time, we have closed above 50 daily exponential moving average, which is the blue moving average, and 200 being on a flatter note, indicates that yes, the slope is flat to positive, indicate yes, there is a bullish scenario. Additionally, on the same chart, if I look at the Fibonacci level, right from the lows of around 16,700 to the highs of 18,887, the reversal has been around 50% retracement. So generally, Nifty has a tendency to retrace around 38.2 to 50% and resume the bullish or the bearish scenario. In this case, we have seen a 50% retracement plus 50 daily exponential moving average plus triangle breakout, and all the sum of that, yes, the structure seems bullish onto the Nifty. Ahead of budget, as we are just a week ahead of a week into the order 10 days into the budget, we are witnessing a bullish breakout coming onto the daily chart, and weekly already trending bullish. The retest has happened, and generally the retest into the technicals offer an excellent opportunity. I would say the low risk, high reward opportunity onto the charts to enter onto the long side or the short side. So in this case, we have seen a breakout onto the bullish side. The retest has happened, and the structure is indicating a bullish trend. The resumption is bullish trend. I believe yes, there could be a possibility that we may see a 18,500, 18,600 levels ahead of budget, or probably on the budget day. So keep a watch on these levels. I believe yes, the structure seems excellent. In the sector wise, what are the sectors you should keep a watch on? So I have covered a couple of sectors over here, two to three sectors, and there are a number of sectors which will have an impact of to the budget announcements. So let's start with the first sector over here is the FMCG sector. Now, if you look at this sector, and I've done a piece on this as well. So in case you haven't read that piece, you can go on to our Equitymaster and you can read my technical view on the FMCG sector. And this is a similar chart which I have added over here. Now, if you look at the structure, I have written A, B, C, D, E. Basically, this is a bullish dragon harmonic pattern. And what does indicate that? After a fall, a stock consolidates in a double bottom sort of structure with the Fibonacci. If you look at the C level over here, which is if I just go on to slightly brief into the pattern, A is called as the head of dragon. B and D are the leg of dragon, and C is the hump, which we generally see in the dragon. If you, in case you have seen a camel, there is a hump over there, and similar hump we generally consider as a C. So a head to hump, a trend line is drawn, and it gives a breakout at E, which is generally known as tail. So here the E broke out at around 44,400, which is the tail level, and the bullish momentum have seen onto the Wednesday session. So I believe with the bullish dragon pattern breaking out, the target as per the pattern is around 46,000 level. So which is again 1,500 points from the breakout level, and you can keep a watch on this FMCG index. Even the FMCG stock seems an excellent opportunity, just as we are moving ahead of moving towards the budget, and that could be a one sector you should definitely look at. The structure seems very bullish over here. The second sector which I want to discuss is the consumption. As we have discussed FMCG, we can't miss on to the consumption. If you look at the consumption, the upper horizontal red line over here, indexes broke about that, though it has been trading below the breakout level. But if you look at the rising trend line, the lower connecting the lows from 2020, the prices, the index is trending above the trend line level, plus the 50 weekly exponential moving average, the green line over here, is also hovering above the support area. So I believe yes, though the index is trending below the horizontal trend line breakout, but the long term trend line indicates that yes, the trend is very bullish. Prices may take support around 7450, 7400, and we may see a resumption in bullish momentum onto the consumption as well. So FMCG being trending out, consumption being trending out, so you can keep a watch on these sector, and probably we may see a bullish outcome coming onto the budget for these sector. The next is the infra. Generally, infra spendings are very important when it comes to the budgets. So infra sector has for quite long hovering around the breakout levels. We have seen use the orange line. If you look at the breakout, it's been trending around the breakout, but the higher halo structure, as per the Dow theory, indicates that the bullish scenario is still intact. Plus, the 50 weekly exponential moving average is sloping onto the positive side, indicating that the long term trend seems very bullish. So, any a positive news, a trigger onto the breakout above the orange line above 55,400, we may see this index rallying back towards 5,700, 5,900 level, which is another 10% rally onto the infra space. So keep a watch on this, and probably as we are breaking from a longer term point of view, the sky is open for the target level, but the momentum seems 5,700 above 5,400, and probably we may extend till rally till 5,900 as well. So keep a watch on this 5,400 level onto the infra space. So there are a number of sectors like fertilizer sector which may have an impact. There are a number of sectors where which will indicate that budget momentum, and one sector where I think though budget momentum may not be much impacted, but the rupee momentum may impact this IT sector. So next chart is the IT over here. If you look at, and if I just look at the IT, we have seen if you look at this lower green line, the long-term support has been held, and now if you look at this two horizontal black line, the fresh breakout has been witnessed onto the daily chart over here, indicating that the bottom is in place. And if you remember, I've done a video as well onto the IT space a few weeks back. You can watch that video in detail, why I believe that the IT is us bottoming out, and we may see on a positive side. Interestingly, it is now again above the 200 days exponential moving average, which we saw last in December. So after a long time, the orange line, which is 200 daily exponential moving average, the prices are trending above it, indicates that yes, the bullish scenario may come back very strongly into the IT space as well. So these are the sectors you can keep a watch on. And coming on to the last segment of this video, the strategy or the probable strategy, why I believe you should look at as a derivative traders. As I said, I'm looking for a bullish bias onto the Nifty towards 18,500, 18,600. The best strategy, looking at the risk reward and looking at the technical setup, I think one should look at the bull call spread. So bull call spread is basically when you think that the trend is bullish, but at a certain level there is a resistance and the momentum may take a pause. So here I am taking the 9th Feb expiry. because I'm looking at in case we have a post budget move as well. If there is a rally, and again you need as an option trader, you don't need to hold on to the till expiry. But considering the 9th Feb, because in case we have the post budget rally as well, we may see a positive. So the strike which I'm taking is around 18,300 call. So one should have to buy 18,300 call, and simultaneously sell 18,700 call, because I'm looking at 18,500, 18,600 as a upper targets, and which may extend till 18,700, and that's the reason I'm looking for a sell on 18,700 call. So the net outflow will be 150 points. You are buying at 225 the 18,300 call and selling 18,700 call at around 25 rupees, 75 rupees. So net outflow is around 150 points, and looking at the range, which is around 400 points, my outflow is 150. So the max risk I'm looking at is 150 points, and the max profit, which is 400 minus 150, is around 250 points. So max profit is around 250 points. So considering the structure over here, I believe the markets may see an upper levels. We may see a rally toward 18,500, 18,600, and which may probably extend to 18,700. So keep a watch on this strategy. In case you have your own strategy and you think that market trend may be a bullish, maybe a bearish, one should look at the call, one should look at the put, butterfly, strangle shots, straddle shots, whatever strategy you have, do comment below this video, and do share your strategy, what you are looking at, and that will be help for much of our subscriber, of our audience as well, those who are watching this video. Your views or your strategy may help someone. So signing off, Brijesh Bhatia.